Hey everyone, welcome back. Ready for another deep dive?
Definitely.
So it's this English learning podcast called Daily Money Briefing.
Huh. Interesting. Okay.
It's actually pretty cool. You get the
Yeah.
financial news and kind of a language lesson all in one.
Oh, I like that. Sort of killing two birds with one stone.
Exactly.
We know you want to get past the noise, right? Understand what's really moving the needle. So today, we're looking at some interesting shifts in the South Korean economy. We've got a market snapshot, a government report on cars, and a survey from the Financial Intelligence Unit. We're going to hit mortgage changes in Seoul, what's happening with auto exports, and the crypto market surge. Trying to piece it all together for you.
Yeah, it's interesting how you've got these different sectors all responding to various things, domestic rules, global trade stuff, maybe even future political guesses.
Okay, let's jump in. Seoul's housing market, there's this stress DSR thing starting July 1st, phase 3. What's the actual impact for someone trying to buy a place there?
Right. So think of it like the regulators trying to build in a buffer. They're adding this 1.5% stress margin for loans in Seoul. Now, it doesn't change your actual interest rate payment right now,
Right.
but it does lower the maximum amount you can borrow. The idea is to account for potential future rate hikes. And interestingly, other areas, they have a lower margin, 0.75%, held for 6 months. So it's really targeting Seoul, trying to cool things down a bit, manage that household debt.
So it's about bracing for the future. And we're hearing people are scrambling to get loans now in Seoul. Why the big rush?
Well, exactly that. For a lot of people, especially middle or lower income folks, this feels like maybe the last window before borrowing gets tougher.
Ah.
So you see the surge in demand, people trying to finalize things before those stricter calculations kick in. That if not now, then never sort of feeling.
Got it. Makes sense. Okay, let's switch gears. Cars. South Korean auto exports to the U.S. They dropped quite a bit last month, nearly 20%.
Yeah, a significant drop.
Mhm.
And the government report points pretty directly to that 25% tariff the U.S. put in place back in April.
Right, the Trump administration tariff.
Exactly. A tariff like that just makes things much more expensive, less competitive. The numbers show it exports to the U.S. were down to about $2.89 billion. That's a 19.6% hit.
Ouch. But it wasn't all bad news for the auto sector overall, was it? I saw some gains elsewhere.
Absolutely. And this is where you see the industry adjusting. Exports to the European Union, they jumped up nearly 27% to 750 million.
Okay.
And other European markets saw good growth too, up 11.6%. Plus, the rise of eco-friendly vehicles, EVs and hybrids that helped cushion the blow from the U.S. market.
So diversifying, finding other markets, pushing different kinds of cars.
Pretty much. Adapting to the trade landscape.
Okay. Right, last area. Crypto? The market in South Korea has just ballooned.
Yeah, ballooned is a good word for it. The Financial Intelligence Unit data is pretty stark. Market cap went from about 56 trillion won in mid-2023 to over 107 trillion by the end of last year. That's a 91% jump in 6 months.
Wow, huge numbers.
And it's not just valuation. Daily trading volume was up 22%. And Korean won deposits sitting in crypto accounts, they more than doubled up 114%.
So a lot more money, a lot more activity.
Definitely. And the crypto operators themselves, their profits surged too. Suggests a real boom across the board.
And the report mentioned something kind of interesting, a potential link to Trump winning the presidency. How does that fit in?
Well, it's more speculative,
Yeah.
but the idea floating around seems to be that maybe a second Trump administration might be, let's say, less strict on crypto regulations. So that anticipation, whether it's realistic or not, might be injecting some optimism, driving some of this investment frenzy we're seeing, adds a layer of political expectation to the mix.
Okay, interesting. So let's recap. We've got tighter mortgage rules coming in Seoul, driven by future rate worries. We have auto exports hit by a U.S. tariff, but finding growth in Europe and with greener cars. And then this, booming crypto market, possibly getting a boost from political speculation.
Yeah. And when you pull back, it really makes you think, doesn't it? You have these distinct signals. Caution in real estate in one specific area, adaptation in a major export industry facing trade barriers, and then this real exuberance, almost a frenzy, in digital assets. How might these different threads, caution, adaptation, speculation, reflect broader economic undercurrents or changing appetites for risk that you might even be noticing in your own world? It's definitely something to chew on, how these pieces connect.
Thanks for diving deep with us today.